All right, so let's go ahead and continue on with Coffee Cafe. So we finished our very first journal transaction and posted it to our ledger. So now that we completely finished that transaction, we can now move on to the next scenario. So here it says that we end up applying for a credit line from Maine Bank of Nevada. Okay? Now let's understand this transaction, right? So go through the 7 steps of transaction analysis. Does applying for a line of credit affect your business at all? Okay. So does this affect my business? And if so, how would I journalize this transaction? Okay. I am applying for a line of credit from Maine Bank of Nevada. So what does this transaction tell me? Right? Will I be needing to journalize this transaction? Right?
Applying, you wouldn't need to journalize it, but I guess once you get the loan, you would need to act, right?
In this case, that's correct, right? You're just applying, right? We don't even know any of the details of us even receiving our credit line. We have no idea how much of a credit line we received. So in this case, the idea here is, has a business transaction actually occurred? Because that's one of the steps of transaction analysis, right? Is identifying whether a business transaction has occurred. In this case, all you did was simply apply. Was there an actual exchange of money going on? Or was there an actual confirmation that, yes, you received the line of credit? Right? In this case, no. All we did was simply apply. We haven't got approved of anything yet. So in this case, no. That's how we have to determine whether we need to journalize or not. All I did was simply request, can I have a line of credit? And right now, they have to run through the processes of going through what is call it, your social security, right, to run your credit line, right? So in this case, all we did was simply just apply. So no actual physical transaction has actually occurred. Okay. So then the very same day, right, we're still on June 4th on Tuesday, you end up selling your furniture for $2,000 cash. Okay. And then, of course, you request to have a ledger account to record the loss. So in this case, we decided to sell out all of our furniture, right? If you remember from our conversation earlier, we didn't care to identify what the furniture entails because we purchased it from the previous company. Now, in this case, like I've told you, right, we're going to just get rid of it because maybe the furniture that the previous company has purchased doesn't match what you want the new coffee shop to look, right? So in this case, you're not going to care to know anything about it except for just getting rid of it. And this is what you did. You did get rid of it, but you end up only receiving $2,000 cash for it. So in this case, right, if I'm getting rid of all my furniture, what is the assumption here? I originally purchased it for $4,000, but I end up selling it for $2,000. So what has happened here? We already know we have a furniture account. We're going to get rid of my furniture. However, what was the outcome of selling my furniture? What did I receive from this transaction?
Hold on. So you sold the furniture, so you get cash?
Correct. Now,
Yeah.
do I have an account called cash?
No.
No. So my assumption is, what am I going to do with that money?
So you'll put it in the register and deposit it?
Not the register because we don't even have the cash register.
Cash in checking bank.
But you are going to
Would you
deposit it where? okay? We are going to...
Well, you would deposit it into the checking.
Absolutely correct. And then normal, so here in this case, I'll go ahead and give you a heads up here, right? In this case, I'm also going to require you to make daily deposits, okay? Now, in this case, if you actually take a look at the scenario, your last transaction of the day was the sale of furniture, because then the very next transaction is going to be the very following day. So in this case, yes, you are going to end up depositing this cash into your checking account because it's the end of the day. All right? So that's the assumption number 2. But also assumption number the first one is we don't have a cash account. We don't have a cash register to put the cash in, and we haven't set up our petty cash drawer yet. So in this case, the only option I have here is the money is going to go straight to my checking account because I'm going to deposit that money. Okay? Now, in this case, we already know that we have furniture, right? But if I purchased my furniture for $4,000 and I sold it for $2,000, what is my assumption that had happened? Did I lose money or did I gain money?
You gained money. It was an exchange.
Yes, but I originally purchased it for $4,000 and only sold it for...
so you lost it.
You lost $2,000. Now, of course, you didn't lose $2,000 in real life, right? This is going to be considered a non-cash transaction because you lost invisible money, right? You just only lost the value of the furniture. So in this case, right, we would have to utilize it as an expense, as in we had to take a loss. So in this case, right, looking at your expenses, which account would most likely reflect that you lost the money?
Be like the depreciation.
So, okay, we haven't used it.
Oh. Would it just be like the owner's? Oh, you said expenses.
Expenses. How did you lose the money?
Would be business.
You didn't buy anything for the business. How did you lose this money?
Just by time.
Not
right?
Not time.
Because you sold it.
Because you sold it, correct. Now, if you remember from chapter 11.5, when we have to get rid of our furniture, how do we dispose our furniture? Right? You have the options, right? You can either just get rid of it, write it off your books. You can either sell it or you can trade it out, right? In this case, I sold my furniture. I got rid of it off my books. But what happened was I did not gain money out of it. I took a loss. So in this case, it's going to be considered an expense because that's what it took me to get rid of my items off my books. So in this case, which account would actually reflect that loss? Right? Because this loss cost me for getting rid of my items, right? For getting rid of my furniture.
Right.
So in this case right here, we have an account called loss on disposal of asset, right? So that's how we're going to recognize this loss, because we have to follow that rule where our debits and credits match. If I'm getting rid of $4,000 worth of furniture, right? Because I'm getting rid of all of it, and I only gained $2,000 out of it, that means I took a loss for $2,000. So that's how I have to record the sale of my furniture, by recording that I end up losing money even though I originally purchased for $4,000, because it's used furniture. No one's gonna want to buy used furniture at full price. So in this case, you end up selling it for half the price. So therefore, you need to recognize that you lost $2,000 for disposing the asset. which is going to be considered an expense, right? So in this case, that account number is 6,700. Okay, we gained $2,000 worth of cash, and because we're getting rid of my furniture, am I increasing my furniture or decreasing it? Right? If I'm getting rid of my furniture, I'm definitely decreasing my furniture account, right? How do you decrease an asset? You would have to use a credit. So in this case, that's exactly what we're going to do, right? We gained money out of this sale, right? So therefore, we're going to increase our checking account because we sold something, right? We earned money. So in this case, that's exactly what we're going to do. We're going to start off with the first thing here is that on the 4th of June, we recognize that we earned some money. So we got some checking going on, okay? Okay, which we know to be check number 10100. Okay? And we know we gained $2,000 out of that sale. Okay? But we end up paying a price for getting rid of my furniture, right? So in this case, I recognize that I lost money, which is going to be an expense to the company. So loss on disposal of assets. Okay? And that's going to equivalent to the $2,000. Oops. That was $6,700 for $2,000. Okay? And because I got rid of my furniture, I'm going to go ahead and credit my assets because now it's gone. I don't have the old furniture in my books anymore. I got rid of it. I disposed it. So therefore, I'm going to credit my furniture because I am decreasing the value of my furniture, or decreasing the value of my furniture. Okay? Or sorry, decreasing the fact that I have furniture. Okay? I'm getting rid of my furniture, which was $13,000. So therefore, how much did my furniture cost me? It cost me a total of $4,000, right? Because I'm getting rid of all of it. I'm not keeping any of the old furniture. Right? So therefore, that's my journal. Now again, I made a space in between so I can make sure that I separate my different business transactions per day or per transaction. Right? And last thing I need to do here is I need to make a note, right? In this case, I'm going to identify that I lost due to sale of furniture. Okay? You don't need to identify who you sold it to. You don't need to identify where you sold it to, because in this case, that doesn't even matter to us because we got rid of my furniture off my books. That's all I care about is I got rid of my furniture. So in this case, at least I can recognize here why I end up taking a loss on my disposal of asset, because I sold it. Okay? I didn't exchange it. I didn't get rid of it off my books. I literally sold my furniture, and that is why I have loss on disposal of asset. Okay? So there you go. My second transaction is locked in. It's complete. So now I need to follow through and plug it into my actual ledger. Okay? Now, of course, we are in the process of understanding this, right? We need to also think about, well, I still need to make a deposit because the money's not going to be magically appear in my checking account, right? I need to go ahead and physically deposit it before my checking account can actually verify that it went through. So before I do my ledger, I need to make sure that I make a deposit to my checking account. Because once again, this money isn't going to magically appear in your checking account. You can't just go ahead and put in your ledger saying, I got $2,000 in my account. No. Again, we have to look in real life terms. If I sold furniture, how is the money going to go into my checking account? I need to physically deposit it. So therefore, before I go ahead and plug my numbers into my ledger, I need to go ahead and confirm that I made a deposit. So again, right here says receipt. So this is going to be how you got the money. So this receipt here is sale of furniture. Okay? For what amount? $2,000. Again, this one I can go ahead and format this to kind of see that this is an actual deposit. So therefore, I'm going to be using dollar signs to represent this. Okay, I got $2,000 in an amount. Okay, what is the date that I decided to deposit? So today is the 4th. Okay, for how much? Okay, or in this case, slip. Now we don't have any deposit slips here, so I'm going to just refer this as my deposit slip number 1. Okay, now of course in real life you're going to actually be getting a real deposit slip number, so make sure you are aware of what you're doing. Okay, because yes, you will have a real life deposit slip number, but in this case, you know, for the sake of this scenario, this is, fictitious business. So we're going to say this is my very first deposit that I've made so far. Okay. And how much is going to be deposited into the bank? For $2,000. Okay. So again, your total deposits could be like if you collected 5 checks in one sitting, then you can wait till the very end of the day to deposit all 5 of those checks at once. You don't have to make a deposit every single time you collect money, right? Especially when we dive into having our sales, right? When you collect money from a check from a customer, are you going to stop everything that you're doing and run to the bank and deposit that money? No, that is inefficient, and that is not definitely definitely not something you should do, right? You shouldn't stop your middle of your operations, right? Stop making the coffee, put the coffee pot down just to run to go to the bank to deposit the money. No, that is realistically realistically not efficient, right? Typically, you would wait till either the end of the day, or you would deposit it first thing in the morning before you open up your shop. So that's just rule of thumb there. So in this case, we are reaching at the end of the day. So therefore, we can make that safe assumption that we're going to deposit the money at the end of the day. Okay. And we're not doing any business. We're not running our business yet. No operations. So we have, the ability to go ahead and deposit it right then and there. And there you go. All right. So now that I deposited the money, so then now it is definitely safe to say we are going to put that money into my checking account. So first thing we're going to do is go to my checking account. Okay, so all the way at the top of your window. And I'm going to go ahead and say that on the 4th, I deposited money. Now, of course, you can either put deposit slip number 1, so that's your reference point there, or you can say that I gained the money from sale of furniture. Okay, whatever description you feel necessary that will complete this transaction. So in this case, sale of furniture, okay, journal number 1, and you increase your checking account by $2,000. So how does the ledger work best for you? Okay, so this is where I'm going to do a calculation here. So we know this is going to be true, right? When you deposit money into your checking account, we know we increased my checking account, meaning if I went from 21,625, right, and I just increased my checking account by $2,000, therefore I should have a total of $23,625, right? That is the same exact idea here, okay? I'm going to go ahead and do my formula as my previous account balance of $21,625. I'm going to add my debit. So in this case, I increased my checking account by $2,000. And I'm going to add in a little extra formula here, just so then it makes it much more easier when you're going through your formulas, that you're not constantly having to enter this formula again and again and again. I can go ahead and subtract my empty credit here on the left, okay? Now, what this does here is what I'm doing here is I'm going to create this formula, so then when I copy this formula down all the way through, every single time I increase my checking account. So for instance, I increase it by another $500, right? It now says it went from 23,625 to 24,125. It increased it automatically through this formula. Now let's say I spent money. I spent $1,500. It's going to automatically subtract that number out because we said credits decrease our account, right? So that's the same thing that the bank would use for you. If you deposited money, you're adding that money back into your account. If you're spending money or writing a check out, that's going to reduce your checking account. So that's what this formula is doing for you, is that you set it up so that it's going to take the previous balance of what it was. It's going to add any debits, and it's going to subtract any credits that happened that very accounting, that very transaction or that very day. Okay, so that's how I'm going to do my formula here. Now, of course, I'm going to also get rid of these numbers here because that's not what we're going to use. But in this case, that is what we're setting up for you. So then you're going to produce much more accurate information, and it will save you 10 times more time when calculating your transactions, because in this case, it's going to be automatically calculated for you. Now, sometimes depending on your Excel spreadsheets, sometimes you might need to reactivate that formula. So you might have to repunch in that formula again just to activate it again. But in this case, I used cell referencing to go ahead and do. So then every time I add in a transaction, it will just calculate everything going downwards. Okay, so that's the first one here, is that we added the $2,000 into my checking account. So now I went from $21,625 to $23,625. So therefore, that means I added money to my checking account. So that means I now have $23,000 left in my checking account. Okay, so that's what it means here. This is the most crucial one that you want to always keep in check, because your checking account is what your main core of operations. It's your go-to place that's going to create your operations, right? It's the money that you're going to need to have in your checking account at all times in order to run your business. If you don't have your checking account, or if you don't keep a good track record of it, you might be running into errors where you're constantly spending, and not realizing that you don't have enough money in your checking account to constantly getting fee after fee after fee after fee. Or you might be not putting in or depositing the money in there, so you're never going to have a real cash flow. So in this case, this is also one of those techniques where now that you're constantly are checking your checking account, right? We have the easy ability to be able to log into our phones and use a mobile banking app to be able to check our transactions as we go. But in that case, this is another way that you can also do that while you're also inserting your transactions. So this is what the accounting behind the scenes that QuickBooks does for you. Here, I recognize I sold my furniture, right? That's the transaction I put in here. But by doing this, it's coding it into your QuickBooks, or QuickBooks is going to code it and let you know that, hey, this is how much money you have in your checking account now that you did your sale of furniture. And that is why it is so necessary for you to have the accounting experience, so you can understand that every transaction that you put in here, this is how it affects your business. I sold furniture. That means I got rid of my $4,000 worth of furniture, and I gained $2,000 out of it, but I end up losing $2,000 because I originally purchased it for $4,000, and I end up losing $2,000 out of it because I sold it for less. Okay, so that's the very first one there. Now the second one says that we have to update my loss on disposal of asset. So again, I'm going to go ahead, and I know furniture is an asset, but remember, This is the rule of thumb to keep yourself in check and in line and make sure you don't make those mistakes. I'm going to go ahead and do it in the exact order that I see it in my journal. So in this case, I'm going to go ahead and do my loss on disposal of asset first before I go ahead and do my furniture. Okay, so that will prevent me from not making any extra errors. Okay, so that's just a practice rule of thumb, especially for beginner bookkeepers, right? Do not skip around because you'll have a highly likely chance to skip it permanently. So in this case, loss on disposal of asset is literally right under license and permit expense. So we're going to go ahead and put in the date, and we're going to go ahead and say loss due to sale of furniture, right? Because in this case, it just says disposal of asset. That is very generic, right? We don't know exactly which asset that we disposed, right? So that's why it's clear if you make a description said, I sold my furniture. And once again, we're still on our general journal page 2, and we took a $2,000 loss, okay? Which is an expense. That means we just end up getting rid of it. So there. Okay, once again, this is a non-cash transaction because you didn't really spend $2,000, but you did spend that extra $2,000 just to purchase that furniture. Okay, there you go. And then now we can go back to my asset and take off the furniture account. So in this case, let's see, we got office supplies, inventory, and then here's my furniture. So in this case, right, I went ahead and sold furniture. Okay? And I end up getting rid of the $4,000 furniture because I didn't want to keep any of it. I just got rid of all of it. Okay? So therefore, I am writing off all $4,000 off my books. Now, if you remember the formula, right? Because I now have a credit which will decrease my asset, if I put in my formula exactly like how I mentioned it earlier, right? You're going to take the previous number. So currently you're at 4,000. You're going to add any debits, which in this case I did not gain any furniture, right? And I'm going to subtract any credits, which in this case I sold my furniture. I got rid of it for $4,000. So therefore I should be at 0 for my account balance. Okay? Because I began with $4,000 worth of furniture, but then again, I got rid of my $4,000 worth of furniture because I sold it. Okay? So therefore, I no longer have any furniture in any type of value. Okay? And that's where that formula comes into play. So again, if let's say I purchased more furniture for $2,000, it would automatically calculate that formula differently. But in this case, I am not debiting my account. I am crediting my account for $4,000. So that's why my formula now tells me I have $0 worth in my furniture. Okay? So that is what we have to do for plugging in our numbers into my ledger. So now that I've done that, and like I mentioned, we did not involve with anybody. I do not care to keep track of who I sold it to, because in this case, that's not part of your main core of operations. You didn't sell it to a customer. And on top of that, you didn't sell it to a vendor. You just got rid of it. And that's all you care about, is you just got rid of the furniture off of your books. So in this case, no person was involved in my company that is necessary that I either owe or they owe me for, okay? So there you go. So journal's done. I post it to my ledger so I can go ahead and do the very next transaction. Okay? So let's see what happened next here. It is now June 5th and it's Wednesday. And now I need to go ahead and pay rent to landlord properties with the contract number 123654. Okay, so here is the contract lease for the building that we're borrowing. We got to pay rent to the building for our shop to take place. So once again, The area is that one on Decatur, right? Today is the 5th. Here's the contract number once again. It's for a 2,500 square foot little area, so that means it's a pretty big space for a store. And here is the details that you're gonna pay a 4-month requirement. Okay, so you're gonna make a 4-month payment. So from June 5th all the way to September 30th. Okay, and that means you're gonna have it for the month of June, July, August, and September. So that's a total of 4 months. Each month is $1,500. So therefore, you're gonna pay for $6,000 worth of rent, and you are also going to be required to pay a down payment or make a deposit, right? Usually that's typical of renting areas. So you're gonna have to require to do a down payment or a deposit. Usually it's about this. It's equivalent to a month's worth of rent or 2 months worth of rent, whatever that your landlord agrees, okay, or puts in their contract, right? So in this case, all we had to do is just pay 1 month in advance worth to deposit for the store location. So therefore, the total amount you're gonna be paying landlord properties is gonna be for $7,500, and you decided to pay with your very first check number 1501. Okay. So, in this case, this is a lot of information to digest, okay? So, first things first is we need to recognize, go through the 7 steps of transaction analysis, right? Has a business transaction occurred? And if it has, how does this affect the business? In this case, we need to pay rent to open up our store. If we don't have a store location, how are we going to have how are we going to sell our coffee, right? So in this case, this 100% affects my business because it is a rental location. I need to pay rent to my landlord in order for us to rent out the location for us to sell our coffee, right? So in this case, I have to pay rent. So that's the first thing I have here is I'm going to be paying to rent. Now, the second thing is, how did I pay for rent? I paid rent with a check. How much was that check out for? It was for $7,500. However, how am I going to distribute my expenses? Or in this case, what am I getting out of this when I pay $7,500? Well, the first one is going to be, yes, we paid for rent. Now, how many months of rent did I pay for? I paid for 4 months, right? So therefore, I have to recognize 2 different things, right? Expenses are usually going to be things that occur for that current accounting period. Now, if I already know I'm going to be only looking at Coffee Cafe for the month of June, how much did it cost me to pay for just the month of June for rent? How much did it cost me to pay for just the rent for the month of June? Right? On the contract, it says that it's $1,500 per month. So that means I only paid $1,500 to pay for the rent for the month of June. So then where does my other 3 months go? We're going to call this prepaid rent, okay? Because what are you doing here is you're making an advance payment for services that have not yet been completed. You're paying the landlord for the rental property so you can hold on to it for 4 months. So you're giving an advance payment to this landlord. That means your landlord is obligated to give you service. So we call this an intangible asset, right? Because that means we have ownership over the next 3 months over this rental property. So that means we made a prepayment on an asset, okay, for 3 months. The last thing I recognize here is I also made a deposit, which has nothing to do with my rent, which has nothing to do with the rent that I paid in advance. This was a requirement from my landlord. Now, usually deposits, right, we understand is if we pay the deposit, typically we're supposed to get that money back. But, if for landlord properties, most likely they use that as a security deposit, right? In case something breaks down in the store, in case you break something in the store, right? They use that as an emergency fund so that they can use that money as a means to fix the building, or they use that as kind of like a security over you. In case you can't make a payment for the month, you can use that security deposit to pay for that current month or whatever reason, right? So that is actually money that is reserved for anything that happens to that property. Now, in this case, right, can I touch this deposit? I gave this money to my landlord. Can I ever touch this deposit? Probably not. And most likely cases, you will never get that money back. So therefore, this deposit becomes something that you own, but it's intangible because that's, once again, you already gave the money to the landlord. That landlord is holding it off for in case of an emergency, whether you can't pay for rent or whether something breaks down in the store. They're using it as like collateral, okay? Where it is an emergency fund for that. So in this case, we made a rent deposit. Now let's go ahead and take a look at my chart of accounts to determine whether I have those accounts or not, okay? So we identified what those transactions are, right? We know that we're going to be writing a check. So if we're writing a check, where does that money come out from? You're writing a check. It's going to come out from your checking account, okay? Straightforward. Now, in this case, we made a rent for the month of June. So in this case, that's going to be an expense for the company, right? So therefore, do I have rent expense? Yes, I do. Account number 62,000 is going to be my rent expense, okay? I've also made a prepayment, right? Because I paid 3 months in advance, right? When you prepay, when you do an advance payment for something, right? That becomes your property, but you can't touch that, right? You can't touch the ability to touch rent, right? It's a theoretical concept, but you have ownership over it. So therefore, we know if we have ownership over it because we paid my landlord for those services in advance. Therefore, I need to recognize that I have a prepaid account. So here, do I have prepaid accounts under intangible assets? Yes, I do, right? I have it for $18,600, and guess what's right under it? You got your deposits, which is also an intangible asset, which we already discussed, right? So therefore, that is all the components that I need to fulfill my transaction, okay? Now in this case, so let's go ahead and identify what has happened here. Rent expense. I incurred it for the month of June. So therefore, that's the first thing I'm going to recognize is I have rent for the total of $1,500. Okay? I also have to recognize that I have a prepaid account because I paid 3 months in advance, which is account number 18,600. Now in this case, I need to calculate what those 3 months are, right? Because it's $1,500 per month times 3. You're going to get $45,000, $4,500, okay? And I also had to make a rent deposit. So you got deposits for $18,700 for a total of 1 month's worth of rent. Okay? And how did I pay for all of this? I paid it out of my checking account because I wrote my very first check number 1501. Okay? So my checking is 10,100. And because I'm decreasing the money in my checking account, right? Because I made a purchase or I spent the money to pay for rent, to purchase 3 months worth in advance, and to make a down payment or a deposit on my landlord's properties, right? So therefore, I am going to get a total of, so I usually use this equal sum to ensure that I didn't make any typos here. And I paid a total of $7,500, which is true because that is exactly what my contract has told me. Okay? So, now that I've done that, first rule of thumb here is what has to happen before you can record this transaction, before you can go ahead and go into your ledger. You need to cut the check first because you can't assume that the money is going to leave your account without writing the check. So therefore, I'm finally going to go to my check register and identify that the very first number in my checkbook is 1501. Okay? Your contract number is going to show it to you because obviously that's the proof of transaction. But mostly, if you are trying to do this on your own, which in in week 3 and week 4, when I say use a check, how are you going to get the check number? You're going to have to go to your checkbook to get that check number. So in this case, this one is already on the contract because it's your proof of transaction. So in this case, today's the 5th, right? How much money did we spend? We wrote a check for $7,500. So in this case, I am also going to format this to be in dollar form. Now, payee. Okay? Who's my payee? Who did I pay? I paid landlord's properties. Okay? That is the person properties that I paid. Okay? And why did I pay for it? So again, most checkbooks will give you like a reason why that you wrote the check out. This is just for extra, extra information for you to keep track of your transactions and where your money is going. In this case, you can make a simple note. You don't have to unless you really need to. But I'll go ahead and say paid for rent, okay? However much description you want to put in there, rent deposit, whatever it is that you want to put the description is. If you think rent is good enough, that's good enough for me. But again, anything that you put in your books is going to be up to you, right? For any description and anything else, but everything else should be matching as well, right? Your number should match mine, but your description does not have to, right? That's up to you what you want to put. So in this case, my note here is I paid for rent. That's pretty much self-explanatory. And that's all I need to do to fill out my check register is I wrote a check on the 5th for $7,500 and it's using check number 1501. I wrote it to Landlord Properties for rent. Okay? And so then now I can go ahead and complete my actual journal description. Because in this case, there's a lot of things that are going on here. Okay? Now, how I like to put my description is I usually like to identify who I wrote the check out to or who was the person I, came into contact with. In this case, we worked with Landlord's Properties. Okay? What did I do? I paid for June rent, right? I paid for advance payment, 3 months rent, and I also made a rent deposit. Okay? And all of that has proof because I wrote check number 1501. This right here is proof that a transaction had existed because I have a paper trail, and that is my check number. Okay, so it's important to use check numbers when you're running a business. But again, now that we're living in a more technological society, you can use a credit card because a credit card is also going to post your credit card statement. That means that's your proof of transaction as well, right? But in this case, we're using a manual checkbook, so we can go ahead and acknowledge this. So again, for a business standpoint, having an actual checkbook is very useful because that gives you concrete proof that a transaction had existed. Okay? So there you go. Now I have finished and completed my journal. Okay? So the next thing I need to do here is follow through and update my books. Okay? In my ledger. Okay? Update my account ledgers. So first thing here is I have to identify the exact order is I paid for rent in the first place. Okay? So rent expense. Okay, so again, this should be in alphabetical order. Here's rent expense. Today is the 5th, right? I paid for June rent. Okay? It is up to you if you want to say I paid landlord properties. This is what I did. It was $1,500 a month, whatever it is. I think June rent is pretty straightforward. Okay, I paid rent for June. We're still on the first general journal page here, and it cost me $1,500. Okay, just like how I journalized it for the month of June, I paid a total of $1,500 for the rent. Okay. Now, the next account I have here is prepaid accounts. So, I'm going to go ahead and look up through my account list here under my assets to find my prepaid accounts. Okay, right here, first one here is prepaid accounts, and that's what I was looking for. So it's June 5th. Now, what you want to put here is, I'm going to put, I made an advanced payment, okay, for 3 months rent, okay, and then I can say it cost me $1,500 per month, okay, and that pretty much sums up your total, right? Okay, we're still on the first general journal. And I paid, right? You could do the math in here as well. 1,500 times 3 gives me a total of, 1,500 times 3 gives me a total of $4,500. And that is what I'm going to start out with my account in my prepaid account. Okay. Here I identified what I paid in advance for. I paid for rent in advance, 3 months. Okay, so I'm being as detailed as possible enough to understand what is going on. Okay, I also have to make a note here down below that I made a rent deposit. So I'm going to go ahead and put rent deposit, which is going to be 1 month's rent. Right? Because that is what my deposit was. It was 1 month's rent, which was for $1,500. Okay? Okay? And last but not least, I need to go ahead and fulfill the next thing is to update my checking account. The most important account that you need to have always constantly updated, which is that I wrote a check. Now for me, I'm just only going to identify that I wrote check number 1501. Because in this case, this right here is powerful information. Because with this right here saying that I wrote check number 1501, that automatically tells me that I spent money, I wrote a check, but in this case, I can go ahead and look up that check number in my check register, right? And that should tell me all the details in who I wrote that check out for and why. Okay? I don't need to identify in my ledger that I wrote check number 1501 for landlord properties for rent. This right here is sufficient enough information to be able to link me to another reference point for me to look up that transaction. I also am going to identify what page my transaction was on. So in this case, I'm choosing to use a code that can, for me to understand what this transaction is and what happened here. So by me putting my check number 1501, I'm able to look up that information on my check register to give me the details in regards to that check. So therefore, I don't need to put a whole bunch of information in my description, right? Check number 1501 already says a lot. So therefore, okay, I'm going to identify this is journal number 1. And because I wrote a check, therefore I'm decreasing my checking account by $7,500. Okay? So if I started out with $23,625 and I need to subtract $7,500, right? Yes, we can take a calculator and manually calculate this, but in this case, because we put the formula in Excel, by me pressing enter, it should automatically calculate that formula to tell me that I just went from $23,625 down to $16,125, right? And you can also do the math on the calculator to confirm, is that statement true? Is $23,625 minus $7,500, does that give me $16,125? And again, the only time you will get an error is if you accidentally punched in the wrong number. Okay? So in this case, right here, it says right here that I for sure confirmed that it was $7,500. So therefore, I should only have $16,125 in my checking account. Okay? But we also have to know this rule as well. Checks take time to process, right? Just because you cut the check right then and there, that doesn't necessarily mean that money is taken out from your checking account right then and there. Especially if landlord properties does not decide to deposit that check right away. If they choose to deposit that then tomorrow or the following day, depending on what day of the week it is, it could take anywhere from 2 to 5 business days to transfer from your checking account to their bank account. Okay? But it's always important that because we know that fact, I need to be smart about it and make sure I don't overspend my money. Even though realistically, I know that money's not going to be taken out of my account, by having this in there already lets me know, okay, you just paid for rent, so that means you only have $16,000 left to spend. You cannot spend more than $16,000 because realistically, this check can clear at any given point in time. Okay, so you definitely want to make sure that you are aware of that, right? Landlord properties could take that check and go to the bank and cash it right then and there. So that means that money's going to be taken out of your checking account almost instantly if they decide to do that. So again, just because you already know that the checking holding period, right, is anywhere from 2 to 5 business days, right, upon the person receiving it. But then again, it also has a 6-month holding period if that person chooses not to deposit that money. It still can hold that value for 6 whole months. So you want to make sure that you are keeping a good track record of your checks that you write and making sure that they do clear. Because sometimes a customer, a vendor, or whatever, they can complain to you and say, I never received your check. I never did this, I never did that, right? So in this case, you always want to verify. If you see a check that's been outstanding for too long, you want to also double confirm with your vendor, hey, did you receive the check? Yes or no? Do you need me to issue a new check? Yes or no? Okay? So that's why it's very important that you keep a really close track record of your checking account at all times. So now that I entered in my journal and I finished posting to my ledger, the next thing I have to do is, did I involve myself with a person? Yes. I involved myself with a vendor, because who is Landlord Properties to us? Landlord Properties provided a service to us, right? They provided me a rent location for me to open up my store. So therefore, I should definitely put this information in my ledger or in my subsidiary ledger. Why? You don't owe this vendor anything, but this vendor owes you. So that is definitely something you definitely want to keep track of as well, is because if for some reason you end up receiving a bill in the mail for paying for rent for the next month, you have proof that the transaction that you agreed on through your contract number means that you have proof that the transaction that they are supposed to serve you for the next 3 months, right? So in this case, that is an often mistake that a lot of companies go through, is sometimes they forget, or they don't, or whatever reasons, that their bookkeeper or their manager isn't properly keeping track of their own books, that they might make that mistake and send you the bill to the wrong person. So in this case, that is why it's very crucial. Yes, a transaction has happened. Yes, there's proof because you have a written contract, but that is definitely something that is pertinent information, right? That is definitely something that is valuable to you, because you don't want to just throw that contract away, right? Because that contract is going to help you fight the battles that you need to fight, right? Especially when you're dealing with vendors that aren't cooperating, or customers who are not cooperating with you, because you have proof that the transaction and the agreement terms that you signed. So in this case, this is also a legal protection for you yourself as the company, because you have the right. You paid 4 months in advance. And if your landlord is refusing to provide that service to you, then you can take him to court, right? And your proof is right here through the contract, the written contract. So that's why it's also very important that we keep a hard copy of our receipts, a hard copy of our contracts, because that is your protection right there. Okay? So in this case, I should put this in my subsidiary ledger, even though I don't owe them anything. I still have the proof, right? I need to record that the transaction has gone through. So in this case, I'm going to go to my subsidiary ledger under vendors. Okay, this is from Landlord Properties, so I'm going to go ahead and look up Landlord Properties. So we have Honest Rob's LV Remodeling. Here you go, Landlord Properties. Okay, and the date is the 5th, right? Because that's when you sign the contract. What did the contract entail? It entailed 4 months rent, right? It was $1,500 per month, right? You also had the rent deposit, right, which was $1,500, which is 1 month's worth of payments. And the second proof of transaction is you paid them with a check. That is the ultimate note that you want to put in there, that you have proof that you paid Landlord Properties, and that's with this check 1501. Okay? So therefore, what is your invoice number? Your invoice number is going to be whatever number that is on a receipt or bill that's going to keep track of your transaction. So in this case, I had a contract number. That contract number told me what the services that I purchased, right, and is needing to be provided. So contract number 123654, I believe. Let's take a look at that contract again. Yep, contract number 123654. Okay. Post reference, meaning where is the proof that this contract was created? In this case, it's on my general journal, page 1. Okay. Now, in this case, my landlord is most likely not going to give me terms. Terms only comes and derives from when you receive a bill and they give you a time period in between to pay that bill. You paid it at time of service. So therefore, you will not have any terms. So therefore, there's no discount due date or an actual due date. Okay? And of course, you did not make a prepaid amount. Why not? I did pay for 3 months in advance. This column is only used when you have never met the vendor before and you are requesting services prior to an agreement, before the bill arrived. In this case, you paid at time of service, so therefore you didn't make a prepayment. You knew what you were purchasing and you paid it up front. So in this case, once again, that's the 2 criteria. You did not receive a bill, so therefore you don't owe, and this isn't prior to the bill, so you're going to leave this column blank. And what did the contract say you had to pay? You had to pay $7,500. Okay? Now, did you receive any returns and allowances? Most likely, with a landlord, you're going to have a hard time getting a refund on rent. So in this case, this column is in case you do end up not liking the landlord, and for any reason that you do get a refund on your rent, that's what this column is for. Okay? There are no discounts to rent. And did you make a payment? Yes, you did. You made a payment with check number 1501. So in this case, yes, I wrote a check for the total value of $7,500. Okay? So in this case, right, that is how I interpret this table. Now, this is also where it's going to also be confusing at the same time if you're not kind of aware. You just have to answer the questions pretty straightforward and simple, right? Did you talk to this vendor before the bill? No. Did you, when you received the bill, how much was it worth? In this case, we didn't receive a bill, but we did receive the contract number. It was for $7,500. Did I make a return? No. Did I receive a discount? No. Did I pay? Yes. That's all you need to know when you're filling this out, is the columns are just answering simple questions. Now, the last column here is the accounts payable column. This is going to give me whether I owe landlord properties money or not. So how we understand when we plug in this formula is we have to understand, right? How much was the vendor asking me for? They asked me to pay $7,500, right? Any prepayment. So if I paid if I paid for the rent in advance before receiving the bill, that's obviously going to reduce my bill, right? Any returns and allowances will reduce my bill. Any discounts will reduce my bill. Payments will 100% reduce my bill. So that is exactly how we're going to understand this formula, is how much do I actually owe my landlord properties? So the formula you're going to need to know for this is you're going to start off with how much was the bill stated for. In this case, it was stated for the invoice amount for $7,500, right? And because I walked you through it, did you make a prepayment? No, that will subtract from your bill. Did I get a refund or return? No, but that will subtract from your bill. Did I get a discount? No, but that will subtract from your bill. And last but not least, did you make a payment? That yes, and that will 100% reduce your bill. So in this case, if I enter that formula, I currently owe landlord properties nothing. And that is true on your end, right? But on their end, you owe us Coffee Cafe service. Okay? So we have to make sure you understand whose books you're looking at. In this case, because we're the bookkeeper, you are only strictly looking at our view, meaning I paid you for services, so therefore you owe me services, not the other way around. Okay? So therefore, if I paid you $7,500, that means I don't owe you anything. Okay? Because that's what my standpoint is. But on their end, because we made an advance payment, they owe me services. But we don't care about them. That's their own problem that they have to worry about. For us, we received the bill, we made the payment, we owe nothing. That's all we care about. Okay? Now again, let's review that formula once again. It's going to be equal your invoice amount, subtract your prepaid, subtract returns and allowances, subtract discounts, subtract payments. Enter. And now that tells me, right, that I don't owe landlord properties anything. Okay? Now, if I leave this area blank, let's say I didn't make a payment, right? If by me clearing out that cell, it tells me right here that because the formula that I put in here was I started out with the bill of $7,500, and because I didn't put in my payment, it says that under my accounts payable, I owe landlord properties $7,500. But we know that's not true because we paid it with check number 1501. So therefore, that's why it's important that you do fill out the cells necessary when you are creating your formula, okay? So in this case, yes, I did make a payment for $7,500. So therefore, that made my liabilities still at zero, okay? But the most important thing is this is a way that you can also keep track that you made a payment to your vendor and that you don't owe your vendor. And your proof of transaction is in two ways. The contract number and the proof that you paid was the check number 1501. Right? And that is going to be where we're going to stop here for today. Okay? So there you go. We completed 3 worksheets, right? We did our journal, right, to the complete with the accounts, the debits and credits matching with the description. We updated my account ledgers, okay, with the appropriate transactions that gave us our account balances. And we completed our subsidiary ledger because we were involved with a vendor, okay? So those are the 3 things that I asked you to go ahead and complete for the first week of Coffee Cafe, and that's what we're going to be doing for the rest of the rest of Coffee Cafe. That's the process that we're going to do. We're going to recognize our transaction, journalize it, post it to the journal. If we involved in anybody in the transaction, we update our subsidiary ledger. Okay? So this is where we're going to stop. So we're going to start on this transaction here. Okay? Actually, we could actually go ahead and do this one. All right? Because this is an easy one. So that very same day, we end up hiring Miss Kim Robinson to do interior design consultation. Okay? Is this a transaction we need to record? Yes or no?
No.
No, because all we simply did was hire her. We do not know when she's going to complete the job. We do not know what she's quoted us for. And we definitely did not receive a bill from her, right? All we simply did was just hire her to do a job, which she has yet to complete. Okay? So that means we'll go ahead and stop here for today, and we'll continue the rest of our transactions. Okay? We'll continue it on Monday. Okay? All right. Any questions so far on how, we're doing for coffee